All right, so there's a lot happening around the big, beautiful bill. We'll break it down for you today. What does this mean for the markets? Well, it means a lot. My name is Paul Barrow. Welcome back into the show. Let's get into it today. I do want to thank our sponsor, and that is Coinbase. This is where you guys can go out there and start your crypto plan. And the cool thing is you can do this as a business, as an individual. Get in there and start moving with Coinbase. Begin to get into the crypto craze, because we are going to see some big activity, I think, now in risk assets. Use our link down below. You can get up to $200 in crypto just by initiating your first trade over there, up to 200 to get it going. So use our discount. It does help you guys out. All right, so this was the headline when it first came out, was that there's a big pause. Now they're starting to change the headlines over Bloomberg, but the point is that Bloomberg was even acknowledging that the pause was in place, waiting on that bill to pass. Of course, it went through the Senate. This will go back to the House now, and will start to make things get very interesting as President Trump, one big beautiful bill, goes right through the Senate. And I think this is the point we've been waiting for. Remember, though, J.D. Vance right now pretty much had to go in and strong arm a lot of what was happening in the Senate to get this done. And we're still trying to get this done in terms of, when I say we, they are trying to get this done by July 4th. Okay, so that is a very key thing. Let me know in the comments, do you guys think it's going to happen by this Friday, July 4th, or do you think this is going to push back? And remember, Trump was even saying no vacation until we get this thing done. So it'll be interesting. Let's go over to this clip right here to explain it all.
Scott, yes, it is now official. The senators, they've been here for more than 24 hours, so they voted very quickly. But yes, as we said, 51-50 with J.D. Vance breaking that tie. Now the Trump mega bill has passed in the Senate. It now, of course, heads to the House. We have heard from a number of lawmakers there, fiscal hawks, even some more moderate members who have had concerns about the bill. But Mike Johnson is determined to try and get this done, getting a vote on this as soon as tomorrow, and that would get it to the president's desk by July 4th. Now, will that happen? That remains to be seen. It remains to be seen if lawmakers dig in their heels or not on some of their concerns, but certainly a lot of momentum with this Senate passage today.
All right, so will it happen right now? This is the Polymarket on it, July 3rd, 4th, and 5th, all leveraging up with July 4th and 5th kind of coming in at the top. So this will be the point around the reconciliation bill that goes through the House that will make this official. These are the things that we are faced with right now. This, though, gets into some of the detail of why this has been pushed back from, even by some of the Republicans, so much, both in the Senate and I think now coming up in the House. There's going to be a pushback. Question is, who's going to pull it off? Who's going to do it? Here was Scott Besssent breaking it down. Take a look.
The benefits that are being cut. What do you tell the nearly 12 million people that are on the brink of losing access to Medicaid?
1.4 million are illegal aliens. Then a huge percent of that are the able-bodied working people who will need to go back to work.
All right, so you can kind of see this is one of the big sticking points, and that is the Medicaid cuts that are going to happen over 10 years. And the idea is that those cuts will start to take place immediately, and they'll start to accelerate, well, not accelerate, but the equal amount over those 10 years. But the point being is that maybe there was a better way, and hopefully in the House there's going to be at least some pushback. Question is, will it get changed? If it does, there's any kind of situation where they back off of that issue alone, most likely this is going to push it past July 4th or 5th. If that occurs, guys, expect a market meltdown. Senator Josh Hawley was one of the pivotal people that was talking a big game around the Medicaid side. Of course, he caved, and that, of course, is where we are right now, and that is going through the Senate. You can guys see, there it is right there. MAGA Republican Hawley says that he will vote for Trump's bill despite his loud opposition, kind of going two-sided here. So I was kind of a Hawley fan there for a moment, but I don't like it when they don't stick to what they're saying. Now, you've got another issue going on right now, and that is inflation. Well, here is Tom Lee coming in and says this is meaningful given an enormous volume of imported goods that Amazon has currently. Inflation, you would see it early. But CNBC kind of hits on it right there. Amazon hasn't seen any prices appreciably go up. That's a big deal, guys, because if we don't get inflation this late into the year after tariffs, are we ever going to get it? And maybe that is the whole point. Is this where Chair Powell is going to start saying, maybe I'm going to give in to this solid majority, because right now it's pretty much everybody already saying, yes, we need a cut, and yes, this needs to happen. Powell also says he cannot say whether July is too soon. Cannot say whether July is too soon to consider cutting rates. I still believe, guys, that July is the date. Remember, it's the 30th of July. We have 4 weeks ahead of us right now where you're going to have most likely the bill going through, most likely no inflation, or at least very little. And the question is, if we start to see jobs soften, it is going to be a no-brainer for Powell to get this done. If that happens in July, expect some big fireworks coming in this summer. Fed decision, though, still everybody saying not necessarily going to happen in July. I still think this might be a good spot. But if not, if it does not go through in July, we don't have an August meeting. September will be a looming date for this, especially if we see no inflation. I believe it will be too late for retailers, and that could cause us a little bit of an economic recession toward the end of the year, with retailers probably being hit most because consumers not spending, and that's what we're going to be watching very close. I want to go to a clip real quick because this is Goldman saying that they actually think we're going to see 3 cuts. Take a look.
What's interesting, too, Goldman raises their 2025 Fed rate cut forecast to 3 from 1, September, October, and December. And it's because the tariff effects have been smaller than we expected. That's what they say. Those are their exact words. Whether it remains so, we'll see. But Jay Powell's already said, if not for the tariffs, he'd already be cutting rates. So, you know, he's got his finger on the switch, so to speak.
And that was the bright spot from his speech last week, and he reiterated it today, too. So we now just have to wait and see, just like he's waiting and seeing. I think they're behind, Scott. I think they should be doing it, but that's not my call. That's their call. So the point being is, after his comments last week, I thought July was absolutely off the table, but September also likely off the table. And I actually think September is a real possibility now.
All right, so people pushing for September. Yeah, I think these are, you know, the narratives that, you know, the typical talking heads of Wall Street is going. I look at a couple of things here. One is the barometer of what's happening in business. And business is the real street versus Wall Street. A lot of this they're looking at from maybe more of a macro position. I still think that the impact is happening so much in Main Street that the job numbers are going to be the pivotal key going forward, because we're not seeing the inflation numbers. So we'll see. Now, there are some out there that are saying that we could see a huge bull run on the back half of this year. Here's one analyst that kind of goes in that direction. Take a look.
And I kind of view Liberation Day more as capitulation day, and we sort of cleaned out a lot of things. Now, throw on top of all of that the sequencing of the policy going kind of growth negative, and now we're looking at some of the growth positive policy changes. For example, the tax incentives in this bill, deregulation, some of the things we're talking about doing with capital controls. You know, that's what we have to look forward to, and that's what the market has gotten ahead of. And the one variable, I think, as you know, Mike, we've talked about this many times, the most important variable for stocks is earnings, and most importantly, earnings revision and earnings revision breadth. And if you looked at a chart of earnings revision breadth, which we published in today's note, it's a V-shaped recovery, and it's powerful as we've seen since COVID. And I think with the Fed cutting in the second half of this year or next year, we could see a rolling recovery, because now there's quite a bit of pent-up demand, particularly in those interest rate sensitive parts of the market.
All right, so he does hit on a few points, interest rate sensitive, and I do agree with that. I think there's so much money on the sidelines right now to his V recovery. Here's the S&P that he's talking about. I mean, this goes all the way back into February of 2025 when we did see that dip coming down. And then there's April, and then boom, we have skyrocketed back here to an all-time high. This correlated into this next clip is where Jerome Powell is starting to see new components that are playing in on his decision. This is about stablecoins. Take a look.
Let me say on stablecoins, if I can.
Yep.
I do share the concerns that you hear here, but I also think it's a positive step that we don't have a regulatory framework for these now in the United States. We tried very hard in the last Congress to work with, people on both sides of the aisle to create such a thing. Now it looks like we're well on the way to creating a framework, which I think is something we need. You know, if we're going to have stablecoins, and apparently we are, we need to have a federal and state level regulatory framework, which I think we're making progress towards having.
We only have a couple of minutes left, and so, many.
All right, so big news over there. Of course, that's Powell, kind of in an unusual character. I hadn't seen him without glasses and a tie. But speaking of stablecoins, guess what? Circle comes in right there. Today we introduced Circle Gateway. This is a new developer service that enables unified USDC balances for instant cross-chain liquidity. This is a pretty big deal because it goes to AVAX, Base, Ethereum, all of this coming out in July. Good for stablecoins, good for risk assets, I think, in general. One point to consider on this, and you guys that are watching our show probably know this, when you're in apps and you're trying to send USDC around, you've got it in Base, you want to send it on Solana because it's cheaper, you're sitting over on ETH, and you don't want to pay the fees. You get the point. Well, this eliminates all of that. So this is, dare I say, boomer proof. It's going to be able to get USDC very easily in and out of wallets and moving into yield generation events. And I think that is the big leap going forward as we see stablecoins start to hit the market as mainstream. Another thing you got to look at, speaking of mainstream, USDG is now fully MiCA compliant, so this is going to go across the EU. Remember that Tether was banned out of the EU, so USDG now going to be possibly one of the key ones that will go head-to-head with Circle over there, and I think that's the point you've got to look at. Look at some of these yields that we're talking about here, and that is another factor that's going to play into this, is we are going to see high yields, which I think starts to push in traditional investors and a lot of people who are sitting on cash on the sidelines and money markets, etc., saying, hey, this is a great opportunity, especially if you take about and look at the European markets for sure. Now let's go into what Tom Lee is doing. Tom Lee, of course, getting some heat. Right now, with the super investor update, he has propelled to #1, all right? And Michael Burry jumping down to #3, Kathy Wood accelerating. If you've been watching our shows over the last few weeks, we've been saying this is coming. Tom Lee's going to make it as the super investor of the year for 2025, at least year to date. One thing to note on Tom Lee's strategy, well, I won't say strategy, but his analysis, and I've highlighted it here, and he says, this is coming from Fred Krueger, a Bitcoiner, says Bitcoin is a millennial asset, and Tom Lee was right. This is the example of Bitcoin investment versus gold investments when you look at millennials. And this is the situation that maybe Tom Lee is seeing, is that Bitcoin is actually fighting a fight that they don't know about, meaning they're not fighting to get the boomer to invest and out of gold and into Bitcoin. They're actually trying to win the millennial, or should be trying to win the millennial investor. The problem with the millennial investor is there's too much selection. ETH, Solana, Avalanche, you name it. It is a different ecosystem, and I think that's the parity, and it might be why we're seeing things like this right here. Tom Lee endorsing Ethereum is probably the next Bitcoin, is such a R move. I lost a lot of respect. This is the kind of hate that Tom Lee is getting. I'm sure he probably sees this all the time, but interesting that we are going to see this from the Bitcoin community. Here is Tom Lee talking about Bitcoin. Take a look.
I think what happened is a couple things. One is a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF provider, and then they just stepped up their basis. So that's not going to push up the price of Bitcoin. It adds to their AUM. It's a wash. Yes, it's a wash. And the second is that the ones who aren't involved in ETFs, but maybe they have $10 Bitcoin. We have clients that have bought Bitcoin at $100, and now it's $100,000. They're not looking to, they don't care if Bitcoin goes to a million. They are probably sellers at around 100,000. So we're churning the base now because 95% of the institutional world doesn't own Bitcoin, but a very significant portion of Bitcoin holders are sitting on huge gains. So I think this is the churn that's happening in Bitcoin now. But of course, the companies that serve Bitcoin, like Coinbase or Circle, have seen huge growth, and they've been the best IPOs and the best stocks. So it's almost like maybe you won't make money trading Bitcoin, but look at the infrastructure providers. They've been great stocks.
All right, so if Tom Lee is right, and we do see an exodus of Bitcoin at, these 110, 120 ranges, then he might be correct in the fact that what is the narrative that people pivot into? Well, everyone seems to be hating on ETH except Tom Lee. So remember, go back, he is the #1 super investor, so he's catching trends before they happen. Has Tom Lee identified something here around what's really could have been shown as a market indicator, and that was the Circle stock exploding off to the races on its IPO. Maybe that's where he is right now. One thing to compare is just take a look at the Bitcoin E30 Bitcoin chart right there. You can kind of see all the way back here, really back into December of 2019 when we started to see these bottoms. And then, of course, these accelerated moves all the way to the top back here in 22. And now we are back at the same spot. So have we bottomed? Maybe Tom Lee is picking up those kind of indicators based on all these narratives that are playing out in this next generation finance market. So very interesting stuff, guys, because this is the key here. If you're catching our show, you're here trying to catch the early trends of this going forward. Now, one of the things that could accelerate all of this is going to be this right here, and that is the SEC is now in the early stages of creating a generic listing standard for token-based ETFs. What does this mean? What it means is that all these token-based ETFs, Solana, XRP, etc., are going to be able to go to market much faster. Remember, it was like 75 days with these 19 B4s and these S1s, all these problems that the SEC would put in front of these companies that were doing this. This could be much faster, simply meaning listing standards will be faster, more clear, and this means we're going to see some ETFs happening. I think this month, look for Solana as being one of the first. Maybe XRP comes in and nails in the first one as well. And if you compare, just an example right here, these are the probability leaps that took off just in the last few days. Of course, the basket index jumped high. Litecoin, Solana, XRP, all now above 95% on odds of approval. Guys, this is bull run capacity. This is where we're going to get. Now, granted, do we see this in the memes and maybe in some of the degen alts? I don't know that necessarily will be the case, but a lot of the high volume, high market cap blue chips may start to see some fairly significant growth as we start to see the market moving forward. All right, if you guys are not part of the Diamond Circle, get in right now. It's a great place to get additional content. And of course, if you guys want to get into our own Telegram group, we leave a link for that as well. You can follow me on X, just @Paul Barron. Thanks a lot. We'll catch you next time right here on The Paul Barron Show.